Hey everybody, Mark Yagi. Hope you are doing well. Welcome back. We're going to continue on this MicroStrategy thing that we've been doing. If you're just getting into this and just seeing this in my feed, this is video number 36 maybe in this MicroStrategy series. It started November 20th. So if you want to understand the philosophy and the thinking and the moves that I've made behind it, as the stock has mostly come down and also had some bounces in there, go back to November 20th and watch that. So today is the day that it's expiring. I had the MicroStrategy 330 calls. So you can see those down here. Let's just take a quick look at the chart on MicroStrategy. I'm going to put it here on a daily, and I'm going to show you. Here's what the daily looks like. That's not the daily, that's the monthly. Let's go 1 year, 1 day. All right, so here's what the daily looks like. And I'm just going to pull it up here. You can see the stock has gone all the way up to 404, and it's trickled back down, and it's had this big up, and it's trickled back down. This is a stock that can whipsaw you, meaning I'm in this for the juice, and the juice usually will bail you out. If the stock stays in some kind of a range or goes up, when a stock goes down, then it bounces up and then it trickles back down, it can get you caught in what's called a whipsaw, which means you're buying in the money premium to roll it up. That's not a loss, but it's a use of working capital. And then you're still getting some juice, but then if the stock goes back down and you sell, let's say at the money, for example, and then it goes above your strike again, you're using working capital to buy back up. Now, those of you that are at the money people, like most people that do covered calls, you're going to go, well, yeah, Mark, if you just be out of the money, you wouldn't have to worry about that. But when you're way out of the money, you don't really get a lot of juice. So I'm in this for kind of a combination of protecting the account first, but also collecting the juice. And the juice does protect the account, okay? Now, it's just the strategy on a stock that's kind of going sideways and in a range that you don't want to get whipsawed. So I'm trying to weave that strategy into what I'm doing. So taking a look at this thing, when it's got a high of the last few weeks here of 407 and it's got a low of, what is that, 310, something like that? Like, that's a pretty big range. So I'm trying to negotiate that range by collecting a bunch of juice, but also protecting the account during earnings like I did a couple days ago. You might have seen that. And it worked out really well. And I collected a bunch of juice for that. And now the stock is a little bit higher than where I was. So now it's time to get back into my normal strategy. Earnings is over, and I'm going to show you what I'm going to do. So let's take a look at my monitor here. So you can see I've got 9 contracts now because I added one more contract probably since we've last talked, right? Added one more contract. And so I sold 9 of the 330 calls. I got $1,535 per contract going into numbers, okay? And so I was able to collect a bunch of juice for that, but I also had some in the money protection that I wanted, okay? The market now, remember I sold it at $1,535, the market now is $1,190. Well, that's a $4 gain because I sold here and I'm buying back here, but most of that now is in the money amount. So I'm gonna have to spend a little bit of working capital to roll up, but I got some working capital when I rolled down. And so I'm okay with that. It would have been more perfect if I would have had the 340s or the 350s, I guess. But, I'm not Nostradamus. I can't predict what the stock is going to do. All I can tell you, I can't control the stock, but I can control my reactions to it and my probabilities in doing an action. So my goal is to collect the juice. So if you could see, I got roughly $1,535, if I remember right, on the juice at that time. I can't remember anymore, frankly. But now it's only worth 60 cents, okay? So the spreadsheet that I'm going to show you probably at the end of this video, because I'm going to take some time to do a little spreadsheet, is going to show you that it cost me 54 cents to buy this back, or whatever that number is. Most of this net liquid is going to be a cost. I got to spend $11,000 to buy it back, but I gained $11,000 on the base position, roughly, right? Or maybe $10,600 or something because it's got a 93 delta. So I'm good with that. Right? It's not a bad thing that I have to spend money to go when the stock is going up. If it continues to go up. If it goes back down, I'm not going to love that. All right. Does that make sense? Okay, so there's what I'm doing. So I'm going to roll these 330s. Let's analyze what I'm going to roll to. So here I've got the 7-day out. That's next Friday. Today's Friday. So I'm going to look at the stock right now is at 341. Now, my plan is to roll up $10 a week. At least that's my plan today. I think if the stock stays in this range, I'm going to be happy rolling up $10 a week and collecting the juice, okay? So I have the 330s. I'm going to look at rolling to the 340s. The 340s are going for about $1,450 a contract, okay? And $1,279 a contract, or $13.07 right now, is the juice amount. Okay, so that's how much I'm collecting from the external amount that's funding this account. So I get a little bit of protection, not much, $1.50, but I'm also collecting $12.70. So I'm just going to roll to the 340s, right? Pretty close to at the money. Here's how it goes. So I'm going to right mouse click, create a rolling order. It's going to bring up my trade. I'm going to buy back those 9 contracts that are expiring today. Those are the 330s. I'm going to roll these puppies up to the 340s. Okay. Okay, you're going to see there's a credit. Doesn't really matter if there's a credit or a debit. My plan is to now roll this up to the 340. Earnings are over. I've got a plan now to go next week maybe to 350s, or maybe $10 ahead of the strike if it goes back down. So my goal is if it keeps going up, awesome. 350, 360 the week after, 370 the week after that. And I think that's a decent plan. I may have to adjust along the way, but that's where I am today. Okay. Plans were made so that you could stick to them, but you also need to be able to amend them as well when it makes sense. Just don't be erratic and make amendments all the time. So let's read this back. I'm going to buy back 9 of the February 7th 330s. I'm going to sell 9 of the February 14th 340s. I'm going at the market. There's my execution. So let's go check it out. Make sure everything worked out perfectly in the account. Now I have no more of the 330s. I have 9 short of the 340s with 7 days left. I got $1,465 a contract. About $1,255 of that, let's call it, was juice. So that's what, 10, 11, 12,000, something like that. I'll take it. It's a good trade. All right, stay tuned. We're going to try to do the spreadsheet right now. Here we go. If you haven't watched me do these math updates, I'm going to watch you do the math update. Let me give you some perspective. A couple of takeaways. First of all, I was hoping it was going to be a little bit better. If I had done this trade yesterday, it would have been $10,000 better. But I didn't do it yesterday. I waited till Friday and got a lot of other stuff going on. This is when I usually do my rolls. So it went from a little bit of, it would have been a profit of about $7,000 and went to like a $3,000 loss, okay, on the position. Now, let's put this in perspective. I started this position when the stock was $477, if I remember right, going back to that November 20th video, where that stock was shooting up, and it actually ended up going to about 540. Here we are today, the stock is at 340, okay? So we've lost $200 off a $500 stock price. That's about a 40% loss. Now, if you want to take away something from this, it's that using covered calls, if nothing else, if I stopped right now, would have prevented a loss on a stock that itself has gone down 40%. Now, you might sit there and go, big deal, you put in 10 weeks of work and you're even, or you're down $3,000. Yeah, but the stock is down 40%. Like, I hope that sinks in, because that's part of what we do is we try not to lose money, and we use juice to collect money. Now, if this stock stays in a range or starts to move back up, or it starts to do some less erratic things than it's been doing, now I've basically paid for a lot of my base position, and now a lot of the profit will start to come. That's the theory anyway, right? But if you just look at it as, well, I spent 10 weeks trading and I haven't lost any money really, that's not a bad thing on a stock that's gone down 40%. Okay, let me show you how this math thing works out. Now, I don't love math all the time, so I've got to use these spreadsheets so I can kind of get my head around where we are. Now, here's what we've done is we've bought the 250s, we've sold the 250s, we bought the 250s again and moved them, instead of the 2027s, we moved them to June of 2025, and then we've just been adding a little bit to our position. So right now we're sitting at 9 contracts, okay? Those 9 contracts have cost me $277,984. What are those contracts worth? Well, the stock has gone down 40%. Interestingly, this is down about 40%. So now the base position cost is now to $159,187. Okay, that's what it's worth today. I'll put that up on the screen so you can see from the account what the screenshot is of what the market value is. About $159,187. Okay, so you can look at that. Well, that's a loss of, let's call it, 120 grand. Okay. However, on the other side of this, I've made $115,462 on all of the closed positions, okay? Non-base position. This is my base position. This allows me to sell these against it to create the juice. Now, So here's how we started, right? We sold to open these 400s when the stock was at like 477, collected a whole bunch of juice, and we made $71,000 by protecting ourselves on that trade all the way down to 400. When the thing bounced all the way up to 540 and came back down to 400, we made money on that loss for most other people, okay? And then we did all these other ones, right? This was a selling of a put strategy. We made $3,000 on that. And then we started to sell. 1129, we sold these 400s. We made $8,700 on that, $5,100 on that. And then the stock popped up and went over our strike, and we had to spend some money to do that. That's part of the game. And that, that all kind of comes into this number. So when you really look at all the trades that we've done, okay, which you can watch every single one of them. I put all of them in the in this playlist. Even up to today, where I just did this trade, okay, we're not going to count that yet because it's not realized. It's just basically flat. It doesn't add or subtract to the account right now. But all the closed positions and valuing the unrealized positions all comes together, and that gives you a full picture of what's going on in the account. This trade that I just closed was the buy to close of the 330s that I just did. You saw that, and we got 11,660. It cost me to roll it out. And so that essentially, even though it was a protection for earnings play, when you add these two together for earnings, I traded into earnings with these two positions. I ended up making $11,000. Okay, and if I'd have done it yesterday, the stock popped up, 11, 12 bucks today. So that amount of in the money amount cost me today. But that's also reflected in this 159. So 6 of one, half a dozen of the other. Well, we take this base position cost of 277,984, we put it there. Then we say, okay, how much is it worth today? If I had to sell it today, it'd be worth 159,000. So that's, those two net out to be a loss. That's fine. And then I get the 115,000 in juice and the roll-ups and all that other stuff. When the stock is going sideways and you have to spend in the money amount to roll up, it's not a loss. But if it's a loss if you keep having to roll up and it goes back down and roll up and it goes back down, because then you're not really able to get ahead. It's just a little bit of the juice that's keeping you in the game, but you're spending money building this position, this base position, and so your return on investment is going down as your cost of owning the position is going up, if that makes sense. So at the end of the day, what I'm hoping here is that in the next 3.5, 4 months, until I have for this base position to expire, if I don't roll it out, which I probably will, I want to just start, that position having it, be paid down, so that eventually that position is free, and now I'm just working on collecting the juice. So my strategy of being $10 ahead every week, we'll see if that works out. That's kind of the goal. Anyway, we'll see how this goes. Right now it's been 10 weeks, and it's been kind of a break even. But I've been through this before, guys. Once it quits doing this back and forth, you're going to start collecting a lot more juice. That's just the way it always works out. Those are my plans I'm laying out there. I'm not unhappy about this. I'd like to start making a couple of bucks on this position. I got a few bucks tied up, but hey, when the stock comes down 40% and then it goes sideways for a while, that's kind of the beginning of what the other side hopefully will end up being. So stay tuned. We'll see how it goes. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.